clue if the layout is good on on Twitter. So just give me a second to check. And if you're in here, just let me know if it's good. You should be able to hear me. And let me just check Twitter. We are looking at silver right now, specifically, and then we'll go over a few more things in a second. But let's just watch for your reference this inversion gap. That's what I'm looking at. No expectations, serious expectations yet. But I do like the drop, definitely. Brings confidence in the fact that they're inducing people to panic is the best way I can put it right now. So just give me a second. Everyone's talking about silver right now. It's crazy, but don't let that distract you from the fact that these markets are rigged. That's it. It's all. Alright, it's not the greatest on Twitter, so if you just want to head over to YouTube, the YouTube link is in my bio. And with that being said, I'm ready to start. Alright, so we're good. We're chilling. Alright. Okay, so here's silver. Really not much. We've been watching it since $50. Excuse me. Alright, so right now we're trading at 77. And I'm going to go on to a weekly chart because that's what I'm on right now. And I'm going to just keep pushing higher. I want to see on the monthly if I can find a proper swing projection. So this annotation right here is an older annotation, but I liked it because it was bringing me to the conclusion that when we were at 50 that we can trade up to 55. So did I expect it to push up to 80 this fast? Not really. I definitely did see possibly just even 100 big mark. And because I saw that so long ago, I'm going to mark it there. And I want to just keep my focus on that long term. Not today, not tomorrow, not next week. So just, it's so far above. If I reset my chart, it's not even in my focus. That's the way I'm thinking about it right now. So just taking it increment by increment, the next push higher could be at 84. So that's about it. Now, that's on a monthly chart. If I take this anchor and draw it up here from the low of this dealing range to the high, not this low because this was a sweep of liquidity. So after that, since then, we've never priced lower below $11. That was in 2020. Now we're at $78. So this whole protraction lower from here on April 11th, April 2011 till January 2016, all of this after it swept liquidity it's being retraded through and rebalanced. So essentially the way I see it is that this is going to act as that door handle or like the door hinge. And if we explore, upwards into buy side, how far can it push? So, like I said, 84, but using swing projections, 85, 91 is next. And that's just the -1 standard deviation. If we start to push higher, if we start getting confluences with this 100 big mark and levels above it, right here, 103.95, that's likely. Now, just in my experience, now, this is not a trade idea. Let's make that clear. This is not a trade idea, but I do like 122 just because it's 2 times the move from this high to this low. So this would be 1, and based off of this parabolic run up, I'm not saying that tomorrow it's going to run up, but if you give it time, how much time? Equally as much as this. This is from 2011 till about, let's just say, 2025, that's 14 years that we have just been trading inside that range. I'm not saying 14 years, but based off of the current climate, it's reasonable to trade within this range that we've formed here. It doesn't have to keep pushing higher. It needs to, I don't know what people call it nowadays, exhaustion risk over something. I don't know, but $70 could come back down there. So that's my, if we're starting to trade down, that's my line in the sand on 70, and this is long term. So if 70, then 100. If 100, like as soon as possible, or rather faster than not. Then, like I said, 103.95, and then 122 even is pretty reasonable. Now, I have some thoughts. And these are just thoughts; they're not even real speculation. But I want to put it out there, but I don't want to put it out there at the same time. But just for my own documentation and logging purposes, I am going to just pull it up. So, gold, as of 1 second. So, gold futures, and we'll even look at the gold prices. We'll just look at gold. Gold right now is trading at 4,500. Now, guys, these annotations were all placed in real time. So something I had been watching for a long time was gold, and I have been waiting and waiting and waiting and waiting and waiting and waiting patiently for 5,000. So gold 5,000, easy, done. It's already it's booked. It's gonna happen. It's scripted in whatever. All right, that's the way I see it. Do I know when? No, I don't know when. But since here, this range from here to here, it has panned out. And this remaining range from here to here is not much to ask for. But how we get here, if I were to just draw squiggly lines, which I'm not a huge fan of, but if I were to, how would we get there? The best case scenario, if I was a market maker and price was going to $5,000 for gold by 2026, assume, even early 2027, how would I do it? How would I get gold to $5,000 and profit as a market maker the most? Well, we got range back here before we reach this low. Okay, so that's one thing. So I don't like this one. We'll try this. So we got range back here all the way down to 4,200. Give me a second now. Okay. So we got range down. Oh my god, this is actually there we go. Range down to 4,200, which comes back down to that previous month's low, which is November. So we're about to close out the year, so keep that in mind. So we could have an extreme push up, which is likely, just based off of the strength, but I don't want to ride along with the train, so I'm going to give it space to retrace back into what I'm watching is this wick high and the close on that candle, and then take the midpoint and take that, and you have a few. And if I could just draw properly, there you have a volume imbalance there. So if we come down into that volume imbalance, eventually I'm just looking for it to come back up and stall as much as it wants to here before eventually something like this, and then that's a bad depiction. Wait, that okay, here, something like this. One spike and then something like that, a drop, right? Kind of. Why would we drop here? Because we have sell side below. So I'll just label that as like S, L, and then we would want to ideally clear that, make some sort of impact here, like some crazy crazy impact, and then work up. No, that's not. It didn't work up right there. And then what we do there in, let's see, 2031. Not saying, that's just how I'm viewing it, if that makes sense. All right, this looks stupid. You understand the point. Hopefully. I'm not, that was just like visually what I see, because you kind of see what it did here. Look at this, guys. Guys, hold on. Hold on. I'm cooking. Hold on. Oh man, come on, TradingView. All right, basically whatever I did right there, screenshot that and compare it side by side to this, and tell me that isn't similar. High, consolidate, months on end. High, push, slightly above, not even, barely, nothing. It didn't even push above. Edge, edging right here, crash, send it up higher. That led to this. And I'm just saying, man, the next target is 5,000. Silver. Look at silver right now. Silver. Alright, guys. If you guys want to join the Discord, just click the link in the bio, whatever. It should be there. And then you guys can join the Discord, ask me questions, just check everything out, what I've been talking about for a while. See the entire history of what I've been texting about. Alright, silver. Oh my god. Right? Look at that. That's a pretty crazy run. Alright, so these were the 2011 highs right here. This is what I was kind of looking at. 50. Just 50 mark, 52 mark, 54 mark. That's what I was basically looking at. We pushed up, we came down, and since then we've just ran up. God, like a crazy amount. 74% in the past month. If we look at the stats, silver is up in the past week, 15% in the past month, 45% in the past 3 months, 65. And long term, we're up almost 160% on silver. So after a year of trading. So some perspective on how far we've come. Now, the reason I'm providing that perspective is because if you look at social media, everyone is just talking about it now, and people don't scroll back on their chart. If you look at a daily chart far enough, this is not enough information, but we have been waiting for it since down here, and so you can see how the volume has actually picked up recently, starting around October of this year, and it has shifted, and it is in a commercial bull market. So any retracements down should only be treated as potential buying opportunities. That's how I'm viewing it. This discount array is a 15-minute discount array. Okay, 15-minute annotation, but I'm keeping it because the reaction that we had, which was at the New York PM session on Thursday, that push led for that Friday run, which was not Christmas. But anyways, now we're at 80, and you can see the open or the close of this candle is here, and the open of this one is here. So close and open are very similar, so that does lead for some possible formation of a rejection block, depending on how we close this candle, because this could come down here and very well trade up and close at a new high of day. So we have to wait for Monday for that, but I'm not going to talk about ES right now, guys. I'm going to actually head out